please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, for the markets, we're up around 82 odd points for the Nifty and up over 300 points for the Sensex. So really no complaining there. Except for the mid-cap index, we could be doing better. We're not step in step with what's happening with the blue chips. But let's see how the rest of the trading session pans out. Like Prashant mentioned, it is an even keel which is coming in on the advanced decline ratio. So we're just about standing at around 1:1. Watch out for a lot of these retail stocks. So, for example, Future Consumer, we have Rupa and Company, we have a couple of others such as Bombay Dyeing and then Avenue Supermarts. So, all of them are showing some amount of momentum. Ashwani Gujral is with us to talk about the markets at 11:30 a.m. Ashwani, hi, over to you then. Stocks and trades.
See, basically, mid-cap IT is again picking up. So as we speak, NIT Tech is again breaking out. It's been consolidating, its gains for the last 4 days. I think that's immediately fresh. So 890 type of stop, and I wouldn't be surprised if IT rally picks up again. That should get to about 950. As far as individual stocks are concerned, Sonata Software is a buy with a stop of 299, target of 315. Yes Bank is a buy with a stop of 356, target of 372, and HDFC is a buy with a stop of 1920, target of 1985.
I mean, I think you had a couple of longs on metal stocks as well, Ashwani, earlier in the day. Still good, good for more there in that pack?
I think Tata Steel is behaving well. GSPL, came back from the lows. But I think metals are kind of consolidating. They are not showing that kind of trend. I think that space is being taken over by large IT and large banks. I think the kind of activity we have seen typically is possibly foreigner activity because they love the large IT companies and the large private sector banks. The rest of the market is fairly, lukewarm.
Okay, on the downside, could telcos have a lot more to go? Could we start looking at a bigger leg here on the downside?
So it's fairly clear that some amount of fresh downside has started ever since Jio came out with the fresh offers. And that is a problem in trading these stocks or investing here because the moment they start to rally a bit, there is a new whammy that comes in. Now, 200 DMA on Bharti is 430. But why I will go and mess around with telco? Why not go with tech, which is fairly young bull market and where things are improving?
Okay, a couple of queries now. Gagan has 600 shares of Tata Motors at 420. Wants to know the view.
See, the last 3 years it's done nothing. Now Jaguar is also slowing down, etc. So the news flow isn't very good. Even the best companies, Eicher, Maruti, are correcting. So the third run guy, I don't think he has too much hopes.
Okay, all right. And Rohan has 1,000 shares of PNB at 200. Wants to know whether to hold or sell that particular stock. Punjab National Bank.
Now all the news flows are over. The stock still hasn't gotten 200. I think Yes Bank is a better buy because, PSU banks, I don't think are breaking fresh ground. So there's no value in staying with PNB.
Ashwani, thanks very much. Appreciate you joining us and getting us those trading strategies and that advice. There is some news at the bottom of the screen and the stock is reacting. This is Homemakers Specialty. Government has granted patent for company's alkali metal iodide products. So that is information right now, and we should actually put them on the phone line and ask them a couple of questions in terms of what this would mean.
I think the patent has come from the Indian government because I think that's also important to know which government has really granted it to them. But I think we have an exclusive which is on our screens as well, where Canara Bank may in fact look to sell its entire 30.4% stake in Canfin Homes. So I think that's an important piece of information which is coming in, and we have Abhishek who's breaking that story for us right now. So they're looking to probably divest that entire 30% stake that they have in Canfin Homes. In fact, I think we have Abhishek with us to tell us more. Abhishek, over to you.
Well, Ekta, last week Canfin Homes Management did meet some of the investors, which they have put it on the exchanges also. So right now what we understand from our sources is that Canara Bank is looking to sell its entire stake in Canfin Homes. Now earlier last month, in December, they announced that they were interested in selling 4% stake, but since that didn't go through, they have put the entire stake on the block. So what we understand on the sale process is that interested candidates will express non-bidding interest on 8th February. Deloitte will be doing a due diligence and that report will be given to all the bidders. On 16th February, candidates will show commercial interest. So by 22nd February, Canara Bank will announce the selected candidates. By 2nd March, these selected candidates will have to give money to Canara Bank. So post the amount transfer and escrow account, an open offer may be triggered if the stake sale is more than 25%. And at current status, we learn from our sources that, the entire block is there for Canfin Homes. So if no money comes by 31st March, then the divestment process may be taken off. Now, Canfin met some of the investors, which they have put it on the exchanges. Kotak Mahindra Bank, RBL Bank and HDFC Limited are the listed entities that they have met. They have also met private equity players like Warburg Pincus, Baring Private Equity, Temasek, KKR India, Bain Capital, I mean are the few names that they have met. We have a response from Canfin management wherein they have mentioned that we would not like to comment on the story, but we have written to Canara Bank as well and we are waiting for a response from them. Back to you.
What is the size we're talking about? What would this amount to in current market cap terms? The 30%.
Current market cap is about 6,000 to 6,200 crores. So anywhere between 1,800 to 2,000 crore is the stake valued of Canara Bank in Canfin Homes.
And what's the reason for selling it?
To shore up the capital. See, as we
because
know,
I think this would be one of the jewels in their crown as well. So, I mean, what kind of, we're talking about valuations on one end, but at the end of the day, they're selling that 30% stake in Canfin Homes. So, sourcing capital as well as? Capital,
and as well look at the amount of interest that Canfin has generated. Now, despite the fact, last 4 quarters, the loan growth has been coming down. But you look at the credit rating, you look at the credit profile, it's on the higher end. There are AAA rated entity with a less than 1% gross NPA. So from that perspective, interest, I mean, I'm surprised with the interest like HDFC Limited or private equity players that have shown in. So interest is there in Canfin Homes for, buying out the stake of Canara Bank.
Yes, absolutely. And I think the market is taking cognizance of this piece of news. Abhishek, thanks very much for that. In fact, Canfin Homes, as we speak, has spiked up around 5.6% and the volumes also are picking up at this point in time. So do watch out for that. So we'll keep getting you incremental details on this, but that's the news which is breaking right now on your screen, a CNBC TV18 exclusive.
Points on the Nifty. So things are right there, no real movement. And the one thing which doesn't give comfort is the advance decline, which is I mean, absolutely flat, equal number of advances to declines. Otherwise, I can't really complain. All eyes, of course, are on Delhi, where in a short while from now, the finance minister will table the economic survey in the parliament. And this will be crucial ahead of the budget, which is essentially on Thursday. What's the buzz in the North Block like? Timsy is joining in with just that. Timsy, over to you.
Well, as you rightly mentioned, all eyes will now be shifting to the Parliament, where Finance Minister is shortly going to table the economic survey. Now, let me bring out some of the highlights that we are picking up from sources that the economic survey could be talking about. Yes, firstly and most importantly, it is going to set the mood for the budget. Very clearly, you are going to see bits and pieces where there will be major highlights towards what is the inflation scenario, what is the growth scenario, how comfortable are we on the fiscal deficit situation. Apart from that, GST is going to be a major area in the economic survey. Remember, this is a transition year. Revenues are still in a, sort of a soft position for the government. Government is still keeping its fingers crossed when it comes to GST revenues. And yes, most importantly, the author of the economic survey, CEA, Arvind Subramaniam, he has been pitching for getting in real estate and petroleum under the GST ambit so that prices cool off. So that is also going to be part of the economic survey. Apart from that, yes, agriculture is going to be a focus, farm distress, how much we should worry about the agri area, how much we should try and put in more when it comes to irrigation and try to get more growth in the agri sector, try to get off the farm distress, to be precise. On the other hand, if you remember, the mid-year economic survey did say exports is an area where we need to work more hard. So very clearly exports, how to expand the scope of exports, how much of worry is the increasing trade deficit. Petroleum, crude is again going to be a major issue. How comfortable we are in the today's global economic scenario, especially when it comes to the crude prices, because last year we got a benefit of low crude prices, but now crude prices are inching up higher. On the other hand, poverty elevation, housing for all, NPA, how much how the government has been working on NPAs, how good it is going to be for the economy, and last but not the least, a new jargon is what CEA is going to put out. Like in the past, we saw the Jam Trinity. Now, again, this year, we are going to see a new jargon. So all in, it's going to be a power pack survey. Yes, definitely. This is the last election budget, so the survey is also equally important. Back to you.
Okay, all right, Timsi. Thanks very much for that. Well, jargon, yes, but maybe a new hashtag by the government as well. G. Chokalingam is with us now to discuss a couple of his stock picks. Choka, hi. Thanks very much for joining in. Well, it's becoming a market where it's more and more difficult to find good ideas. So you have a couple of them. Let's start with Nesco. What is the story behind that?
Yeah, this is a Mumbai-based company. A lot of cash on the book. Cash is around 500 crore, debt-free company. It has got about 70 acres of land. Unlike other companies where they sold the land to unlock value, this is using it as a cash cow by expanding the existing business as well as getting into new business. Now it is setting up 5th IT park, and it's also expanding the exhibition center, and it has already set up 2 food courts, and it also plans to have a 5-star hotel. I believe that there are a lot of surplus land, and this land can be used for further expansion and getting into new business, and it trades only around 20p on 1 year forward earning. I believe that in 3 years it can be possibly a multi-bagger as well.
Choka, I mean, does the current earning stream justify buying this, or this is basically all an asset value story?
No, certainly. Even current price justifies. That's why the difference between other deep value stock and this stock, there is a visible profit stream also, which is continuously growing. It has set up already 4 IT parks. Now 5th IT park is coming, and it is running exhibition center successfully. So they are all inflation sensitive. As inflation rate goes up, the rental income keeps going up. So it is trading at 22 PE despite having 500 crore cash and a lot of surplus land bank. So going forward also, there will be a steady growth in the profits, which is already happening for the last 5 years. So that is why I find this quite a unique player with a lot of land bank.
Your other choice is HPCL. What are you liking about it right now, considering the kind of news that we've seen, the ONGC plus crude prices?
Yeah, very interesting question. I mean, we bought Infosys also when it crashed to 865, even ONGC below book value. So this is a bargain buy, I consider. You know, the market has failed to notice the consolidated earnings stream of HPCL. If you look at FY17 consolidated profit, it made a 2,000 crore more than the standalone profit. And consolidated EPS, it is trading at just 7 PE. And after acquisition of shares by ONGC, I firmly believe, I may be wrong, but I firmly believe there is a lot of opportunity for restructuring. Even post-acquisition, minister made some media interview. So if I take a cue from that, it is quite possible to bring all refinery business under HPCL and also bring petchem business from ONGC under HPCL, and then ONGC can sell upstream business to, HPCL can sell small upstream business to ONGC. And all this can mean, huge upside for its revenue and top line. As I mentioned earlier, even on standalone basis, it is trading at a single-digit PE. And it's got a huge pipeline network, retail network. Also, lastly, I firmly believe that the oil price will crack. It is not sustainable at this level. In the short term, it will remain firm, but medium to long term, it will crack because America has doubled the oil rigs in the last 1 year. So therefore, I like HPCL and I consider as a great bargain buy.
Choka, the last one is Kochi Shipyard. We've spoken about this before. You're bringing it up again.
Yeah.
Go on.
Yeah, as your colleague mentioned, it is very difficult to find ideas with a lot of conviction. So therefore, I am repeating it. And in fact, after we covered 4 months ago, there are a lot of developments in terms of tying up with the Hooghly dock for expanding the its yard facilities, and also it has got an order from Navy, a couple of thousand crores, and it is also expanding the repairing facility by expanding it in Cochin. So all these developments are new in the last few months, and I firmly believe that it is a thematic play. It's a great wealth creating stock in the long term. As I mentioned earlier also, the naval defense is emerging as a major theme in Indian Ocean near China. So all their neighbors are actively monitoring the sea, and which means there would be a lot more demand for the ships from Cochin shipyard. And finally, the repairing facility, it has made a double profit in the last 3-4 years, and there it is expanding in a big way. So considering all this, I feel that in this bull market, it's still a very safe bet to buy and make wealth in the next 2 to 3 years.
Okay, all right, fair enough, Choka. We're going to leave it on that note. Thanks very much. Well, we're waiting for the economic survey to be tabled in Parliament, but nonetheless, do watch out for a couple of stocks. Maruti, maybe it'll get back to that 10,000 rupee elusive mark for that stock. So it's up around 4% top gain on the Nifty. But a lot of stocks to discuss, a lot of news to discuss. It's a wrap on Trading Hour. Halftime report will take all that forward.